everyone, welcome back to the channel. It's time for our monthly full portfolio update, and with all the recent market volatility, now is the perfect time to break it all down. Right now, my portfolio sits at $197,000, down little over 2% year to date due to the market correction. The Nasdaq has dropped 9.7% and the S&P 500 is down 5.5% so far in 2025. I currently hold 33 stocks, a mix of high growth stocks, dividend payers and ETFs. Though Robinhood shows that I'm only down 2%, but I'm actually down over 5% year to date. And this difference is because of my swing trades I've been doing and my cash position. I have close to $100,000 invested and I have another $100,000 ready to be invested. But rather than panic, I've been strategically buying at key support levels, trimming some positions and even adding new companies to my portfolio. So in today's video, I'll walk you through my full portfolio breakdown, the stocks I'm buying and selling, my price targets and stock predictions for the next 1 and 5 years. Stick around because this is going to be a deep dive into my investing strategy and my game plan moving forward. Let's get into it. Before we dive in, just a quick note, all the stock predictions I mention are based on my own research and analysis. I've been making dedicated videos in my stock prediction series where I break down these forecasts in detail. Be sure to check out the playlist on my channel. Let's start with my high growth stocks which make up a significant portion of my portfolio. First up, we have AMD. I currently own 20 shares with an average cost of $106. Right now, the stock is trading around $101, which means I'm down close to 5% on my position. But I'm not worried. My 1 year price target for AMD is a 25% upside, and in the next 5 years, I see it growing over 213% based on AI demand and semiconductor growth. I have my buy zones set at $96, $74 and $56, and if we see a pullback, I'll be adding more to my position. Next up, we have Amazon. I currently own 12 shares with an average cost of $205. Right now, Amazon is trading around $189, which means I'm down over 8%. I see Amazon rebounding over the next year with a potential 23% gain, and in the next 5 years, I expect it to grow over 181% as AWS and e-commerce continue to dominate. I have my buy zones for Amazon at $181 and $174, where I'll be adding more shares. Next up, we have Google. I currently own 28 shares with an average cost of $166, and right now my position is down close to 6%. My 1 year price target is a 16% upside, and in 5 years I expect 106% growth. Google isn't as undervalued as some other stocks, so I'll be only adding if it drops to my buy zones at $148 and $136. Moving on to Arista Networks, I currently own 12 shares with an average cost of $90, and this position is down over 15%. While I see a 15% upside in the next year and a 96% gain over the next 5 years. The upside isn't as strong as some of my other holdings. Because of that, I'll likely sell this stock once I break even or lock in some small profit and reallocate to higher growth opportunities. Now let's talk about Broadcom. I currently own 111 shares at an average cost of $180. My buy zones are $157, $143 and $122, and I see Broadcom growing by 19% in the next year and 138% over next 5 years. The next one, everybody's favorite, which is Nvidia. I currently hold 29 shares with an average cost of $126, and right now the stock is sitting around $107. I have my buy zones at $102 and $79, and my 1 year price target is a 26% upside. While over 5 years, I see it gaining 214%. With AI and data center demand skyrocketing, I believe Nvidia will remain a strong winner in my portfolio. Now let's talk about Microsoft. I currently hold 17 shares with an average cost of $404, and right now Microsoft is down to $378. I see Microsoft gaining 14% in the next year and 96% over 5 years. But since the upside isn't huge, I won't be adding aggressively unless it drops to $360 or $350. Next up, we have Tesla. I own 3 shares at an average price of $239, and right now the stock is up close to 9% from my buy price. My 1 year price target is a 24% upside, and in 5 years I see 190% growth. I'll be adding more if it drops below $200. And the next one I have is Lam Research. I currently hold 109 shares of Lam Research with an average cost of $74.75. I'm considering adding more if it drops to $57 or lower. Based on my analysis, the stock has an upside potential of 16% in 1 year and 114% over the next 5 years. Next one I have is Vertiv Holdings, ticker symbol VRT. I currently hold 101 shares at an average cost of $84.50. If the price pulls back to $62, I plan to average down. The stock presents a highly attractive upside of 27% in 1 year and 235% in just 5 years. The next one in my portfolio is Next Tracker. I currently hold 10 shares with an average cost of $40.70. My plan is to add more if it drops below its 200-day EMA, which is at $38, with a further buy level at 33.5. Since it's a relatively new company, there isn't enough historical data for a reliable 5-year growth projection, and the 1-year upside is only 1%. I'd rather wait for a better entry below $35. Moving on to Snowflake, I currently own 4 shares with an average cost of $141, currently up about 3%. My next buy targets for Snowflake are $133 and $108. Given that the company still has a negative EPS, I'm cautious and will wait for a few more quarters before considering a heavier investment. And the next one I have is Chipotle. I currently own 53 shares at an average cost of $56.50. Currently down close to 10% on this. I'm planning to add more if it drops below $40. The projected upside is 20% in 1 year and 150% in 5 years. Lastly, I have Trade Desk, where I hold 22 shares at an average cost of $72. Currently, I'm down over 21% as the stock has fallen nearly 60% from its recent highs of $140. My key buy levels are $51 and $40. The upside is at 22% in 1 year and 179% in 5 years, making this a long-term buying opportunity. Now, let's move on to my dividend-paying stocks, which provide stability and passive income. The first one I have is Realty Income. I currently own 50 shares with an average cost of $54.78. This stock pays a 5.53% dividend yield and is one of my favorite monthly income stocks. My buy zones are $52 and $51. The next one I have is Coca-Cola. I have 50 shares at an average cost of $63 and my position is up over 14%, and I'm watching for a pullback before adding more. And the next one I have is LTC Properties. I currently own 70 shares with an average cost of $33.97. With a 6.5% dividend yield, my buy zones are $33, $31.3 and $30. I have is Johnson & Johnson. I currently have 10 shares with an average cost of $142 and my position is up over 7%. My 1 year price target for Johnson & Johnson is 28% growth, and over 5 years I expect a 245% growth. I'll only add if it dips below $140 again. Next one I have is Target. I have 11 shares at an average cost of $125. Currently I'm down over 17% on this. My buy zones are $89 and $82. And I'm not seeing much upside, only 6% and 36% in 1 and 5 years. So I will sell this up in few quarters. And then I have CSX. This is a railroad company. It isn't a flashy pick, but it provides stability. I own 47 shares at an average cost of $33 and I'm down close to 11% on this. I don't expect massive gains, but railroad stocks hold steady in bear markets while still paying dividends. And the last dividend stock I have is Hershey's. I hold 10 shares with an average cost of $162, currently up close to 5%. I'll only consider adding more if it drops to below $152. Though I don't see that happening anytime soon. On the upside, I expect it to break above $200, where I'll decide whether to take profits or hold for dividends. That wraps up all the dividend stocks in my portfolio. Now let's take a look at the ETFs I'm holding, starting with SCHG, which is the Schwab US Growth ETF. I currently own 181 shares with an average cost of $26.77. I plan to buy more at the key support levels I'm watching are $24 and $22. And the next one I have is SCHD, which is the Schwab US Dividend Equity ETF. with 160 shares at an average cost of $27.82. My buy zones for this are $27, 26.2 and 25.5. Then we have JEPQ, which is the JP Morgan Equity Premium Income ETF. This is a new addition to my portfolio. This ETF has been on my watch list for a while, mainly because of its 10% dividend yield and monthly payouts, which is a great bonus. I currently have 40 shares with an average cost of $55.43. My next buy zones for JEPQ are 50.4 and 49.5. Moving on to AMDY, which is a yield max ETF for AMD stock. I currently hold 200 shares with an average cost of $9.7. Since this is tied to AMD's performance, I expect it to rebound as AMD recovers. It also offers a massive dividend yield of over 30%, and last month alone I earned $50 in dividends. However, this is a short-term hold for me, so I'm not reinvesting those dividends. Next up, I have TQQQ, which is the 3x leveraged ETF for the Nasdaq index. I hold 35 shares with an average cost of $67.58. Since this ETF moves 3 times the Nasdaq movement, it's strictly a swing trade for me. My plan is simple: buying low and selling high on particularly this one. And the last ETF I have is IBIT, which is the Bitcoin Trust ETF. I own 8 shares with an average cost of $43.62, and I'm currently up more than 10% on this. If it drops below its 200-day EMA, which is at $42, I'll add more, with additional support levels at $34 and 31.4. Alright, now let's look at my swing trades. In my current swing trade positions, I hold Bill Holdings with 30 shares at an average cost of $50.67, currently down over 11%. Based on my analysis, the stock has an upside of 15% in 1 year and 99% over 5 years. And the next swing trade I have is GoDaddy. I have 5 shares with an average cost of $178, and I'm up 1.5% on this. With a 23% upside in 1 year, I plan to hold and wait for the stock to recover. Lastly, I have Salesforce, which is CRM. I own 8 shares with an average cost of $279, currently down over 4% on this. My projections indicate a potential upside of 13% in 1 year and 83% in 5 years. Now let me show you my recent buys. I bought 1 share each of Meta Platforms, Palantir and TSM. I made a video on these in my stock prediction series, so please go check it out, why I'm buying these stocks and what are the upside for these stocks. And lastly, I'm watching Uber and Shopify because these stocks have a massive upside potential in the long term. That wraps up my full portfolio breakdown and my game plan moving forward. I love to hear from you. What do you think I should add or trim? Let me know in the comments below. If you found this video helpful, smash that like button and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one.